I think we hit six figures. I do these 10 surprises every year, and one of mine was, that we hit six figures. We definitely take out the all-time high.
Mm,
That could happen in days, right?
sure.
Once people realize that these ETFs are taking out more Bitcoin out of the market than is mined every day, and after the halving, it's going to be two or three times
Mm,
that. So it's just a supply demand problem. So we're having a demand shock right now, and we're going to have a supply shock in April. We're going to go from 900 Bitcoin a day to 450. You put those two things together, number go up.
mm,
And then we haven't even talked about the FOMO part and the leverage part and the
yeah.
stupid part where dumb people play dumb games and win dumb prizes.
Many people, crypto investors and detractors alike, have described the launch of the spot Bitcoin ETFs as a failure because of price declines. For example, popular gold bug Peter Schiff has talked more about Bitcoin than his beloved gold since the ETFs launched. When Bitcoin dipped below $39,000, Schiff said he was surprised it was still that high and that he expected a more disorderly decline. In another post, The Economist noted that the new ETFs aren't creating additional demand, but merely shifting demand from the underlying asset. In yet another Bitcoin post that could have helped Schiff preach more about gold, he outlined his very myopic understanding of Bitcoin and how it works. The post reads, "Here is how Bitcoin works. We create something with no value and then artificially limit its supply. Then we all pretend it has value and buy it. Other people see the price going up and they buy it too. Then we all keep hodling it, hoping everyone keeps pretending it has value." All this post shows is that despite thinking and tweeting about Bitcoin daily, Schiff still has no understanding of how it works. Unfortunately for Schiff's fellow gold bugs, The Economist has had little to say since Bitcoin prices recovered, and we hit $42,000 on Friday. The noise and bemoanings about the ETFs notwithstanding, it is clear that this has been a successful venture for Bitcoin, a point we believe even people like Schiff will grudgingly come to admit in the coming weeks and months. In a recent interview with Thinking Crypto, renowned investor and hedge fund manager Mark Yusko gives his 2024 Bitcoin price prediction. According to Yusko, the Bitcoin ETFs have created a huge demand shock, which, with time, will significantly impact prices. But the bigger news is that by April, the halving event will create an even bigger supply shock that will make Bitcoin's price go completely parabolic. Mark predicts that Bitcoin will easily smash the $69,000 all-time high and hit the much-anticipated six figures before the cycle ends. We will now bring you clips from Mark Yusko's interview. Please watch, like, and share this video, subscribe to the channel, and turn on the notifications bell so you instantly get notified when we upload a video. You can also check out our other videos featuring interesting and insightful analyses from some of the most brilliant minds in the industry. Thanks, and enjoy the video.
People are talking about it in different ways. There's people saying, oh, it was a total failure. I'm like, what are you talking about? I mean, we set all-time records for ETF trading on the first day. When you put together the basket, it was $4.6 billion of trading in the first day. Like, oh, but there was only a few hundred million of net inflows because GBTC was being liquidated. I'm like, sure. I mean, did people expect on day one, all the advisors out there would say, oh, I made a mistake. Clearly, I should rush out and load up. No, it's going to take time for education. All the advertisements are going to come. You're going to have, you go to BlackRock.com.
Yeah.
Their landing page, their main landing page for the whole firm is an ad or the one pager for IBIT, their Bitcoin ETF. So that's a big deal. I mean, that's a really big deal. And so here we are 4 days into trading, and we've got $1 billion of net new money into IBIT. We've got $2.5 billion of capital across what they call them the newborn nine, and then GBTC converted, and yes, it's losing assets because they kept their fees really, really high, knowing that the people who had a big tax gain aren't going to sell over fees. So it's kind of a little bit of a cash grab because they've got some challenges I think, over at DCG. But bottom line, I think it was a tremendous launch, tremendous day for digital assets broadly. There's all the maxis are upset because, these people don't own Bitcoin. You're right. Technically, you're right. The Bitcoin was created so you and I or anyone else could exchange value without an intermediary. So no, these people are not going to hold their keys and they're not going to put it in cold storage. But here's the thing. There's going to be a transition from TradFi, traditional finance with trusted third parties, to ultimately DeFi or NoFi, right? Where there's no trusted third parties. This is going to take time, but this is a great stepping stone for people to add what has been, the best performing asset over the last decade. It's actually been the best performing asset 12 of the 15 years it's been in existence. Most people have zero exposure. Not people listen to the podcast, but most people have zero. And, I've been talking about this since 2017, 18, right? Get off zero. Zero is the wrong number. Now, I'm not saying 100% or 90% or 80%, but zero is just wrong.
Yeah.
And you want to have some of this asset in your portfolio for lots of different reasons. For the low correlation to other assets, it protects your portfolio. For the fact that it is a store of value against devaluation of the currency. That was the big one for me. When Larry Fink, right, who's the head of the largest asset manager on the planet, BlackRock, who 6 years ago said this was an index of money laundering. Yeah. Bitcoin was an index of money laundering. For him to then come on CNBC and say, no, it's a store of value that you should own to protect yourself against the devaluation of the currency.
To say it was surprising to hear BlackRock's CEO warn investors about currency devaluation is a big understatement. It was a big shock, made even bigger, when he recommended that investors use crypto to avoid devaluation and maintain their wealth. Larry Fink made that extremely bullish statement last July, about 3 weeks after his firm applied to offer a spot Bitcoin ETF. During the interviews, the BlackRock CEO emphasized that Bitcoin is digital gold and an international asset that can help investors hedge against inflation and currency devaluation. A couple of months later, Fink again described crypto as a flight to quality. While no truer words could have been spoken, nobody expected such glowing recommendations from Fink, a big traditional finance player that benefits massively from the corrupt permission setup. Mark pointed out an interesting fact about currency devaluation during the interview. He noted that the United States national debt has grown by $1 trillion in the past 3 months. It first hit $33 trillion in September, then $34 trillion just 3 months later. Comparatively, it took 199 years to hit the first $1 trillion in debt. Now we do it in months. In a few years, it will be in weeks or even days. Let's get back to the interview, as Mark further discusses the importance of Bitcoin and how it compares to other assets, especially gold.
I think this is the year, 2024, I think, is the year where people finally understand that Bitcoin is digital gold, right? I mean, gold is this amazing asset. It's an asset that is money, right? It's actually one of only 2 or 3 monies in the world. Money is an asset that exists in the absence of a liability. Everything else that we think of as money, dollars, yen, euros, are not money. They're currency. Currency is backed by debt. And money has to exist with no associated liability. And it has to be given value, ascribed value by use and custom. Okay. And I love that there was a video years ago of a guy selling yak meat, like back in ancient times. And this guy walks up with a chicken and gives him the chicken and gives him the yak meat. And then a guy walks up and gives him gold. He's like, the hell is that? Well, it's gold. So what do I want that for? I can't eat it. I can't use it. I mean, I can't sell it. He says, just trust me. It's going to catch on. And the idea that a piece of shiny yellow rock would be the thing that we all for 5,000 years would use to ascribe value. Well, the reason is because of scarcity, right? The stock to flow ratio, the amount of new production relative to what's used or lost or stolen is roughly equal. So the stock, okay, the amount to flow is very high, which means your scarcity value is very high. Well, Bitcoin actually just passed gold in terms of the stock to flow, the amount that's created every year versus what's lost or stolen. Okay. And that stock to flow ratio means that it's very scarce. Well, scarcity is one element. You also need something to be portable. Gold actually isn't really that portable. And the real problem with gold is it's not very divisible. Like if I had a bar right here, right now, and I wanted to break it in half, and I think I'm pretty in shape guy, but not really, but I'm not strong, right? I could not break that bar of gold, even if I were super strong, right? Even if I were Arnold, right? And I could, even he couldn't do it. I could stuff it into my computer and send it to you. Well, I can hit a couple buttons and send you Bitcoin, like instantaneously. And I can do it to 100,000 units, Satoshis, 100 million units per Bitcoin. And this is, I feel sorry for Samantha. She's a very nice lady, Samantha Dulac, and she basically just misspoke, right? And said, well, I don't understand. It's Satoshis. That just means it could be infinitely divisible and create infinitely more. It's like, you mean if you take a pizza, you can cut it into infinite pieces and feed the world? Really? Is that what you're saying? There's still one pizza. But Satoshis are just a devising unit that allow us to not have to think in full Bitcoin at $50,000, but in terms of pennies or Satoshis. So ultimately, we'll get to that point. And there's lots and lots and lots of Satoshis, 2.1 quadrillion, which is why my hashtag on my Twitter handle says 2.1 quadrillion. But that's where we're headed. And divisibility, portability, and this idea that triple entry accounting is just better. It's a better system.
Please share your thoughts on Yusko's outlook and price predictions in the comments section below. Meanwhile, the US Securities and Exchange Commission has delayed its decision on 2 spot Ethereum ETF applications. On Wednesday, the Commission said it had delayed BlackRock's iShares Ethereum Trust, filed last November. It made a similar announcement on Grayscale's Ethereum Trust, which, if approved, will be converted to a spot Ethereum ETF. The proposed change was filed in October. According to the regulatory agency, another announcement about the approval or denial of these ETFs will be made on March 10th. The SEC said, the Commission designates March 10th, 2024, as the date by which the Commission shall either approve or disapprove, or institute proceedings to determine whether to disapprove the proposed rule change. The Commission is instituting proceedings to determine whether the proposed rule change should be approved or disapproved, and seeks and encourages interested persons to provide comments on the proposed rule change. It would seem another epic Grayscale versus SEC lawsuit is upon us, despite SEC Chair Gary Gensler's recent warnings that the approval of spot Bitcoin ETFs will be limited to a single cryptocurrency. Do you think the SEC will again be forced to approve spot Ethereum ETFs? Please drop your comments and observations in the comments section below, subscribe to the channel, and hit the like button for more videos like this. Thanks for watching.